Joining us now is Bespoke Investment Group's co-founder, Paul Hickey. Paul, happy Monday. So how much do you believe this rally in a week where we're going to get so much new information from GDP, inflation reading to, of course, all of these earnings?
Oh, yeah. I mean, the earnings, I think something like 38% of the S&P's market cap is reporting this week. So far, earnings season has been pretty weak for S&P 500 companies. In terms of stock price reactions, we've seen companies, whether they beat EPS forecasts or miss forecasts, from the open to the close, investors have been selling them. So it's just, and what the market's been doing overall is declining from the open to close too. So investors are taking profits. What I would say, though, is what's really encouraging about today, and what you often see during, when you see a market low and then a rally, is you get that up open, you get that sell-off in the morning, the weak hands get out, and people start to think, oh, gosh, here we go again. But then the market today actually turned around and rallied again. So I think if you're looking for silver linings after a week, which has been pretty brutal as far as just relentless selling pressure, today was a nice break from that.
Okay, some hope in the big picture. Now, tomorrow, from earnings before the bell to after the bell, I want to single out Pepsi, UPS, Tesla, Visa. The temptation, of course, to pay a lot of attention to Tesla because Elon Musk. But which of those names do you think is going to give the most relevant signal about the state of the economy and maybe the markets?
I think, Visa, if I had to choose one, I would put Visa because it'll give us a good read on spending as on the part of the consumer. Pepsi, what we'll be watching for there is the margins are, consumers are starting to push back. There's only so many times you can raise the price of a bag of Doritos. And, eventually investors are going to say no more. And so we'll like to hear about that. How are price increases? Can they keep taking more price here? And we'll see how that goes. But so I would say Visa's the big one, and then Pepsi after that.
All right. Cadence is out. We're going through those results. We're going to bring them as soon as we have them ready for you. In the meantime, Paul, what matters more right now? Is it earnings or is it the run-up we've seen, the backup we've seen in yields, especially on a day where treasuries were pretty sanguine today, which perhaps helped stocks with this start to the week?
So I would say earnings. I think all of this, we so much focus on the Fed, and I would just wish we could ignore it more because the earnings are what driving things. As all the way back in December, we were saying the worst thing for the market is if the Fed cut rates in March, because if they cut rates, there's a reason they have to cut rates and things aren't looking so hot. So I don't necessarily think we need to see the rate cuts. The economy isn't, running at all cylinders here, but it's still doing well. And so I don't think we necessarily need to see the rate cuts. And interest rates, as far as the longer end of the curve, whenever you see a rapid increase like we saw in the last few weeks, that's going to make investors nervous. But if we can see some stabilization, that's a good thing. And what's really been interesting, you look for the reasons for this sell-off that we've seen in the last 3 weeks.